Hello, everyone. This is Software Journey with Learn to Code with me. And today we're going to talk about talk a little bit about Hive's reverse stock split. It's 5-to-1 reverse stock split, why that happened, whether that's a good or bad thing, and just my thoughts on it. Once again, this is not financial advice. This is just for entertainment purposes only. But to get things started, first thing is I want to show you the resource that I'm going to use to look up this information. You're welcome to look it up as well. If you go and Google Hive blockchain with any browser of your choice, go ahead and select the first option, which is the company website. Go to investors. This is where you can find articles relating to what kind of information the company is publishing, as well as their filings. So this is perhaps like their balance sheet and so forth, their 10Qs, 10Ks, and so forth. Now, that being said, I'm going to be focusing on this article right here at the top. Hive blockchain announces a 5-to-1 share consolidation. I have it right here. And let's go ahead and take a look at it. So we could see that there was a 5-to-1 reverse stock split that took place. That was released on May 10th. So essentially what's going on there is there was 400 million outstanding shares. So those are the total number of shares that are available. And we have a reduction by 5. So you go ahead and divide that by 5 and you end up with about 82 million shares, which is, I think reasonable, just because there were a lot of outstanding shares that exist out there. Now it's more in line with what the other companies have. But just to kind of get into the idea of what's going on here, when you reduce the number of shares, the market cap itself stays the same. It's a way to artificially increase the stock price. And we're going to talk about why that would even take place. But as far as what the company is still valued at, it stays the same. So I know at the time that this was happening, it was trading for around 80 cents. You go ahead and since you reduce the number of shares by 5, you essentially multiply the stock price by 5. So 80 cents times 5, that ends up being about $4. And nowadays you can see that the price is reflected at $4. If the price moves by 5 cents, so if it goes, let's say, to $3.95, from $4 to $3.95, you can think of it as its previous prices as moving 1 cent. Right. So I know perhaps it was scary for several of you when you saw that the company went from, $4 to $3.60 this past week. But really, if you take that difference was only 40 cents. And if you divide that by 5, right? So that really was only, if you think about it, an 8 cents movement, right? So 40 divided by 5. Not really much of a movement. So it essentially went from 80 cents to 72 cents, right? So it may seem a little bit scary, but that is what it is. And with respect to the market cap, it always stays the same. Okay, so what it's valued at will stay the same. So I just want to make sure that people aren't too focused on the stock price itself, because that's not a reflection of what people are paying to own that company. Okay, so once again, the more you understand fundamentals, the more you'll kind of feel comfortable with, the stock price is just, it's kind of like looking at BMI. Yeah, BMI is one thing that you can look at, but if, let's say, you have a very muscular person, extremely fit, like let's say Arnold Schwarzenegger back in his prime, he had a incredibly high BMI. Because compared to his height, his weight was extremely heavy. And so you would say, oh man, this person's really out of shape. Well, he wasn't out of shape, right? He was an incredibly fit bodybuilder. It's just that's the wrong metric to use. Okay, does that make sense? Now, the next thing I want to kind of point out is reverse stock splits in general have a negative association with them. And that's because they're with companies that are generally losing money. They're not profitable companies. They're companies that kind of are teetering on death's door, so to speak. They're losing money. Their value is continuously going down for good reason, because if they're losing money, they really have no revenue coming in, no high margin products. Then really, like, what's that company for? And so a reverse stock split is a way to make sure that they remain above a certain value. Their stock price remains above a certain value and they can stay trading on the NASDAQ. So that's why you'll hear a lot of bad things regarding a reverse stock split. However, if you refer to my previous video, you'll see that Hive is extremely profitable. It has about 60 plus million in net income for the past quarter. That alone, relative to its market cap, right now the market cap of Hive is about I mean, depending on what you see, when I look at Robinhood, it's about like 320 million. Here, let's go ahead and take a look. Hive blockchain market cap. cap. You can see that its market cap, okay, so it's listed at 415. Its revenue is its net income, I should focus on that, is $64 million. So if you divide 415 by 64, 415 divided by 64, you can see here that that's 6.5 quarters. 6.5 quarters, that's 2.5 years in order for it to make up, essentially double its size. So that's incredibly good value. Everything about its fundamentals are excellent. Once again, I just defer you to my previous video. You'll see why it is undervalued. It's selling at underneath its book value, I believe. So it has a price to book value. Price to book value. Let's take a look. Oh, sorry, HIVE. I believe it was like 0.9 something. It was incredibly low. Yeah. Okay. So here's another metric that we can look at. This is the book value per share. So if it was trading at its book value right now, it would be $5.53, but it's not, right? It's currently trading at about $4. And so you can see here that, because it's under its book value per share, you're actually getting it at a steal. So once again, this is not financial advice. I'm not telling you to purchase this company, but this is just saying that this company is very set apart from all these other companies that are performing a reverse stock split. This is a profitable company. This company has just extensive profits. It's essentially a money printer. That's the way I kind of like to look at it. Now, the last kind of point is, why would it perform a reverse stock split? Because everyone seemed to be complaining about that. Well, it's because it's a regulatory requirement. So let's go ahead and just see what I mean about that. So NASDAQ stocks under $1 requirement. You go ahead and just Google that. You'll find that if a stock stays under $1 for, I believe it's essentially like a month, or it'll go ahead and vary. The language varies a little bit, but essentially if it stays underneath $1 for about a month, then it gets a warning and it'll get delisted. So what that means is it goes from being on the stock exchange to the OTC market, over the counter market. And so that's essentially where penny stocks trade. And that's where typically prices of a company just insanely devalue, just because they're it's harder to invest in them, right? They're not as open. There's not as many brokerages that let you invest in the OTC market. So this was more out of necessity, right? Just because despite it being a profitable company, for some reason it's being really undervalued. I think it's just because people are panicking about Bitcoin, and they're thinking that all these miners are not going to be making any money, I guess, because Bitcoin's going to zero. That's what I guess the thesis of many is. But I myself hold that Bitcoin's holding steady at about 30K. I could see it increasing in value. JP Morgan saying 38K. All these other investors. I think Michael Saylor was saying, I think like $1 million in like a few years. I am of the opinion that because this is because Bitcoin has a finite capacity or finite amount, it's going to increase in value over time. It's already been adopted by so many large institutions, countries even, that it's here to stay, that because of that, its price will increase. And these companies that are able to mine it, that are able to continually receive more Bitcoin, continually able to increase their value on their balance sheet because they hold Bitcoin as well, they're just going to become more profitable over time. And that's why I've been loading the boat on specifically HIVE blockchain. I just love the fact that it's, essentially a money printer. But those are my opinions on the company. The next video, I'm going to explain what happened if you were in the reverse split and you own stock options. So if you own calls, essentially. The same with puts, but so let's say you were buying calls on HIVE because you believed it was going up, or let's say you were like myself and you sold covered calls. Then what does that look like for your future, right? You might be very scared. It's understandable if you bought calls. If you sold calls like me, then probably you're kind of relaxed about it. But I'll go ahead and share that in the next video. I hope that you really enjoyed this video. I plan to making a lot more of these videos on all of the miners and just my thoughts. Feel free to comment below to see any video you or see any video of a company that you want analyzed. I am looking to pump out this content as much as I can. So thank you for watching. I hope you have a wonderful day, and I hope that you're watching the next video.